Hi everyone, my name is Morongo Mosetli, and in our previous video, we looked at what a loan is and what type of loans are available to the general public. Today, we'll be looking at the requirements you would need to have in order to get a loan, and do you really need one? Remember, a loan is something you're borrowing. It's something that has to go back, and therefore the banks and other financial institutions have very strict regulations about who they will give the loan to. The main things you need to check is A, do I have an emergency fund? And if I don't have an emergency fund, what am I going to do if I can't pay back my loan? See, sometimes the bank will be nice and give you a flat rate to pay back every month, but sometimes they're gonna say you have to pay back a percentage of how much you owe us. And if you don't have that money and you haven't checked in your finances to make sure you can meet those problems, then you're gonna have an even bigger problem when the bank takes your house or your car, or later even takes you to court because you weren't able to pay. And sometimes even worse, if you have something like life insurance, your life insurance may end up being taken away to give to the bank because you owe them money. So before you apply for a loan, before you even think of going to the bank, let's look into our finances, see what our expenses are, what's our income, and how much is left over for either savings or debt. There's a rule we use for personal, 50, 30, 20. We only use 20% of our income for debt. We never use anything more than that, because most of the time, if we are using more than that, then we create a problem where our needs are not met, our wants are not met, and any emergencies that come up are also not met. Number two, because the bank is going to do a background check on you and any other financial regulator, go to the RCS or the post office and check your credit worthiness. It's only under 50 pula, I believe, and they'll give you a report that tells you whether you owe somebody, whether you've been blacklisted, whether you might end up having more interest charges because you don't have a great credit score. Then number three, build your credit slowly. Get a small credit card, do a small hire purchase for a laptop or a piece of equipment you might need, and then build your credit to show people that whenever they give you money for free, you're willing to pay it back on time and without being called to ask where the money is. This is mostly what investors and banks are looking for. How likely is it you're going to bring back the money every 20th of the month, every 15th of the month? How likely is it that you're going to add an extra 500 every few months so that you can reduce how long you're paying your loan for? Remember, when you take a loan, it comes with interest, and therefore that interest charged over a certain amount of time can double your loan, it can triple your loan, it can quadruple your loan. For example, most hire purchases, your Hi-Fis, your Incredible Connections, and any other store where you might get household furniture will charge you up to 27% in interest for your hire purchase. And this is charged every month over 2 years or 3 years, which you'll be paying them. It seems really simple to say, it's just 200 pula per month for 3 years. 200 pula per month for 3 years comes to almost 10,000 pula, when you could have paid 3.5 or 5,000 or whatever the cost is. So these are some of the things we actually really need to look at personally. Besides whether we can pay it back, what is our relationship with money, and what's the likelihood we're going to default at some point? Because it's a long-term commitment, like a marriage, like a business, like anything else you have to sign a contract for. It legally binds you to owing the bank or any other financial institution, and you want to put yourself in the best financial position to be sure you're paying them back on time.
The mistakes that normally we make when it comes to taking loan is where somebody just gets a loan for the purpose of being able to get it, because most of the time, as long as you have income, there is somebody out there in the market who can offer you a loan facility. But it is your responsibility as the one who gets the loan to know, do I really need to get it this time? So getting a loan for the sake of getting it because you qualify for it, that's the first mistake that we tend to make when it comes to credit. And ultimately you realize that at one point you may be overly indebted and you may need now to access credit, but now you are already into debts more than you can take, and you can't access that facility when now you really need it. So timing is important. Know when to get it and when not to get it.
If you'd like a checklist that shows you what kind of documentation you would need to apply for a loan, click the link below and learn some more, and then catch our other episodes to stay friends with me.